The whooping rise in local stocks lifted the rupee to trade with a firmer bias during the previous week, and the currency hovered in the range between 74.15 to 74.30 on most of the days in the week. The IPO-related inflows of more than USD 500 million and exporter selling spurred the breach of 74.30 resistance, and the domestic currency touched a high of 74.08 on Wednesday before ending the week at 74.15. We believe the likely intervention from RBI at the 74 level or so could prevent any rise in the rupee exchange rate beyond the above resistance level on a sustainable basis. The overall momentum shall remain sideways for the near term, and we expect the 74 level to hold for a bounce back to 74.60 to 80 level after the IPO-related dollar inflows recede. The RBI kept the repo rate unchanged at 4% as expected and retained its accommodative policy stance. The MPC said it will continue with the accommodative stance as long as necessary to support a struggling economy hit by the COVID-19 pandemic. Against the threat of a likely third wave of the pandemic, the central bank assured that they will remain vigilant in the background of rising infections in certain parts of the country. RBI has increased the retail inflation estimate for the current fiscal to 5.7% from 5.1% projected earlier, while retaining the GDP growth forecast for the current financial year at 9.5%. The policy announcement has no impact on the rupee exchange rate. In July 2021, exports grew to USD 35.17 billion, the highest exports growth in 9 years amid rise in external demand due to recovery in key global markets. This follows exports of USD 32 billion each in May and June 2021. Imports also rose to USD 46.40 billion, leaving a trade deficit of USD 11.23 billion, which is slightly higher than in the previous month. The strong recovery in exports in the last 3 months period could induce the central bank to maintain a weaker bias in the exchange rate, and hence we do not expect the rupee to breach the 74 resistance level on a sustainable basis. As the demand is increasing in the global markets, RBI would be willing to maintain a competitive exchange rate to boost export growth. India's fiscal deficit narrowed to INR 2.74 trillion in the April to June 2021 period from Indian rupee 6.62 trillion in the corresponding period of the previous fiscal year. That was equivalent to 18.2% of the government's estimate for this financial year, compared with 83.2% of budget aim in the same period last year. Receipts jumped 256.4% to INR 5.47 trillion, while the expenditure rose only 0.7% to INR 8.21 trillion. It is interesting to note that during the January to July 2021 period, the dollar index gained by 2.15%, whereas the major currencies namely Euro, Great Britain Pound, and Swiss franc, marginally gained by 0.02% in the corresponding period. Indian rupee had depreciated by 4.13% against GBP and appreciated by 2.98% and 1.27% against Japanese yen and euro respectively in the referred period. The weakness in the dollar index has lifted the rupee to trade higher. Dollar inflows into Indian companies raising capital through various means has led to a twin benefit by way of significant rise in local stocks and a relatively stronger rupee, even though the dollar index is firm. Driven by the current momentum and the government's focus on reforms, the local stock indices touched new lifetime highs on Thursday. BSE Sensex and Nifty 50 registered a lifetime high of 54,717.24 and 16,349.45 respectively on Thursday. A third wave of the pandemic and inflation may prove to be a drag on the strong upside rally in the local stocks. Corporate balance sheets have significantly strengthened, and the government spending on infrastructure and fast track of the reforms agenda have all contributed to a bullish sentiment on local stocks. The buying spree from investors gathered pace amid better than expected Q1 of earnings of Indian companies, adequate liquidity, vaccination drive, and conducive global sentiments.